This is the macro show. This is pregame, okay? We're trying to play the game that's in front of us today. You know, leadership matters at Hedgeye. So again, being transparent, accountable, and trustworthy people. This is a game about playing and weighing probabilities. It's not about picking stocks. It's about picking the right portfolio.
So Keith, we have a lot of new subscribers, right? Especially after the free week. A lot of people decided to join us. They weren't here for like the phase 1, phase 2 of the bear market. So
it doesn't mean that those things didn't happen.
Right, they still happen, and so.
And it's probably why they've joined us, because it happened to them.
Yeah, exactly. And so they're probably seeing, right, as like Silvergate and SIVB, seeing those crashing. But how do you think about covering and crashing markets?
Well, markets, I say this all the time. I mean, market crashes typically occur from oversold levels. Our definition of what is oversold is the low end of the range. So you want to be very careful on intraday moves. In particular, you should be watching where front month volatility is going. So one very obvious example is when you have something like the VIX go into the fuck bucket. Now, this is where new subscribers are going to get really, really excited, because this is a real important one. Currently, you know, we have a risk range on the VIX of, call it, 18 to 24. So when the VIX goes like this, it constantly bouncing off this level, right? It goes into here, and the top end of the range of volatility has the low end of the range. The equivalent of that on the S&P 500 is 38.91 this morning, okay? So if we were to see that 38.91 and a 24 VIX, I will be covering some. But if I start to see that sucker howl, you start to see 25, 26, and this is where I'll update you in real-time alerts. I'm like, I'm not covering some. I might even press shorts there. I definitely look for other shorts, because I don't want to take off my net short exposure. For the record, I just went from, so for example, yesterday into the close, I went from 13% net short at the start of the week to 3% net short. I took 1,000 basis points of net short exposure, and that's how I make money, right? That's how I pay to go to Cartagena. I don't go for free. Nobody's running my money, getting me that. So that's where you got to be very careful. Obviously, if this gets anywhere near 29.30, this thing's going to blow the roof off, and you're going to have down days like if you're new to this that you've seen before, but you probably weren't proactively prepared for. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.